Welcome to this PayTrace webinar. My name is Sam Johnson. I'll be your host. I am the Customer Success Manager at PayTrace. Joining me on this webinar, we have both Mary Miller, our Director of Marketing, along with Jeremy Boogaart, our Vice President of Product. Now, before we get into the actual webinar, I want to go over some housekeeping on what to expect over the next little bit. If you haven't been on a PayTrace webinar before, I want to give a special welcome to you guys. On these calls, we're going to go over some different topics about payments and how that can lend to your success as a merchant, as a partner of ours. And today's going to be a really exciting webinar. It's going to be about 3 tips to make more payments, to take more payments, and make more money. Now, we're going to cover a lot of content on here. And if you have questions, comments, or emotional outbursts, we want to keep you guys engaged. So please open up the Q&A panel on your Zoom window if you are attending this live and send in those comments. We'll take about 5 to 10 minutes at the end of the session to address those. If you are watching the recorded version of this, we will provide some contact information, or you can add some comments on whatever platform that you're watching this on, and we'll respond to you as well. Now, with that said, your presenters are myself, Mary Miller, and Jeremy. We're all going to be alternating and talking about some different areas within payments and within the B2B payment landscape to get you some more insight. And if we take a look at our agenda, we've got it pretty jam-packed on here. So to kick it off, Mary Miller is going to talk a little bit about just B2B payments landscape, some research, some data that we've uncovered out there, just to give you guys some insight into what that looks like today. And then we're going to get into some different ways that we can help improve your business. So some best practices into how to offset transaction processing costs, which will be covered by Jeremy. We'll also get into some of the security and compliance nuances and requirements that are involved in payments. When businesses are accepting any forms of card and ACH, there are some different rules that we need to play by to make sure that our customers' information is protected and that we are being held accountable. And then we're going to get into some of the fun tools that we have out there. We're going to get into some AR automation tools. How can we get paid faster? How can we accelerate cash flow? We're actually going to take a little bit of time to go into a demo on some of the solutions that PayTrace has with this. And then lastly, we're going to wrap it up with a few success stories and then take some time for Q&A. So with that said, I'm going to jump off my soapbox and I'm going to turn it over to Mary.
Thanks so much, Sam. Thanks everyone for joining today. As Sam mentioned, we're going to start with a little bit of sort of level set industry research data. You probably have some of your own sources that you refer to, and you know in your daily life what your finance team is struggling with, but also what your priorities are for the next year. And as you look back at this year, where that lands. And what we're seeing based on the data that we use to kind of guide our business and based on the customers that we work with, we see that CFO priorities this year have been largely represented across these 3 categories. So 50% of CFOs have been focused on liquidity management, right? They want to make sure that they have cash on hand. And of course, accounts receivable comes into that very largely. We'll talk about that in the examples and what that day in the life of looks like. 32% of CFOs are focused on cost containment. And I think, that's pretty standard as we think about, our budget and our management. We're always trying to do more with less, right? Keep those costs under control. But also 21% are focused on working capital. And what I think is interesting about that is organizations now are starting to look at multiple ways to finance their business. And in fact, even credit cards can come into play there. However, I think what's really important about this is that all of these elements focus on how can we get cash in the door faster? How can we be more consistent about that? How can we automate some of those things that really help us have a good handle on our priorities, on our liquidity, on our cash management as we look at the business? And speaking of that, we're going to talk about how those payments come in the door today as we look at the next slide. So I'll wait for Sam to get there. All good?
Actually, Mary, I think this is actually a really good time to get some audience participation.
Oh,
if
fantastic.
you're okay with that.
Absolutely.
So,
please do.
We're going to tease this up a little bit, but there are a lot of different ways that a business today can accept payment and what types of payments that they're accepting. So I want to get some audience feedback here really quick and
Sure.
just ask, what forms of payments does your business accept today, right? Does that look like check payments? Does that come in the form of ACH or credit card, or are you doing something completely different that we don't really know? Go ahead and do a quick response there. I'm going to pull this up.
Awesome.
All right. And it actually looks like there's a lot of ACH acceptors here today.
Very cool. We like that. We like that.
Right.
Interesting.
So when we look at the B2B payments landscape today, Mary, what are we seeing here on this graph?
Yeah, it's interesting, Sam, not very much aligned with what our audience on this show, on this session is, which is great. That means that you all come a little bit ahead of the game. But what we see today in the market is, and this is based on industry research and data, in addition to what we see with our customers who come in the door really trying to expand the type of payments that their organization accepts, is that more than 60% of businesses today in the B2B world accept payments via check. Only 26% are on ACH, only 7% credit card, and then there's a small slice of the pie that's represented by other. What's most interesting to me about this is, and I've spent a long time in the accounting world. I've been on the AP side of the business. I've been on the payment side of the business. I used to be an AP manager. I've worked in ERP systems for a long time. And in all of my roles in past lives that bring us to now, I've dealt with checks coming in the mail, invoices coming in the mail, sitting down at the desk, opening the envelopes, getting everything out, entering the data, processing the payments, processing the invoices. And it's a very, very manual, time-consuming process that leads to stacks of paper, manual workflows, sneaker netting things around the office, waiting for approvals and all of that, whether you're on the payments receiving or outbound AP side of the business. Checks are still a huge part of that equation. I don't know about you guys, but when COVID happened and everybody was sent home, many companies that I talked to at that time would still say, we have a small group of people going into the office. Guess who they are? Accounting, the accounting and finance team, right? They're still going in, opening the checks, getting them to the bank, overnighting them to a CFO if something needs to be expedited or double signed or whatever. So the process of accepting checks and the cost of that in the B2B landscape is still very prevalent. As you can see, more than 60% accepting checks. We're going to talk a little bit more about what that means in terms of actual dollars and cents. But as you can all probably relate to, it's a very time-consuming process, and that costs money in and of itself. So if you can relate to this landscape and what we're seeing here, hopefully you'll make it a priority to move your business more into the digital and ACH and credit card world, and we're going to explain how that can help your business. But if you're still in that big bucket of checks, you can learn a little bit about how we can help accelerate that cash flow that we talked about a little bit earlier.
Yeah, when you speak about that example, Mary, two words that really come to mind for me are manual and efficiency. And when I think of that, I think of this as a very manual, time-intensive process like you've laid out. And it is 2023, right? We dated this presentation on the previous slide. People were talking about flying cars, but we're still manually mailing paper checks in envelopes. Right?
Yeah.
And I think that lends to a very lack of efficiency. So, oops, sorry, just skipped ahead there.
Yeah.
I think that plays really well with this concept of AR automation.
Right.
Can you outline a little bit about what this chart is showing?
Yeah. So what we're representing here is kind of the breakdown of the steps that I just described, right? Keep in mind, finance team may be still going into the office, maybe even today, or in some cases, getting FedEx envelopes sent to their home every day or every other day with this kind of stuff. But what happens is when a customer buys something, whether it's a business or a consumer, we're going to focus on business examples in this discussion. But when a B2B customer buys something, they're getting the result of that thing, that service, that product instantly. Right. And in many cases, we have to wait for the whole invoice process, right? So the customer makes the purchase and then the merchant invoices the customer back to that paper and envelopes and sorting and mailing and putting a stamp on it and hoping you get to the post office before they close, all of those things, right? Time passes. And even if they have some level of ability to make that a digital transaction by sending an email, there's still some time that has to pass, and as the email gets generated, as the invoice gets generated, make sure it ties to the right customer account and all of that. Time passes, customer receives invoice. You see the picture of the mailbox here, of course, because many of those things are still coming in the mail, right? We talked about that. And then that customer routes the invoice for approval. And again, even before COVID, this was a challenge, right? The person who needs to approve an invoice or sign a check is out of the office or on vacation or at an event or whatever, right? That thing sits on that person's desk for however long it takes to get that approval. Eventually, it gets approved, the payment gets cut, the check gets issued, put in a mail, put on a stamp, drop it, repeat, reverse cycle, right? Time passes again. And then finally, the merchant receives that payment and they're able to take that money to the bank. This process, friends, can take 28 to 45 days and can be as expensive as $23 per invoice. Now, none of us have a line item for that in our budget, $23 per invoice to do this manually. But what we do see is costs and fees associated with digital processing. What we don't take into account is all of the time and manual steps that are involved in this manual process. So we're going to take a look at what those fees mean if we do go a digital route, and keep in mind that what we're fighting against is $23 an invoice when we do this on a manual step. When you automate this process, you can have that payment in your account, in your bank account, within a couple of hours if the person is really quick, but more realistically in less than a week, within a few days. In a B2B perspective is a little bit more reasonable to expect. So you can shorten this from 28 to 45 days down to just a few, and of course have access to that cash much sooner, as we talked about before, as being a top priority for us.
Absolutely. And I think just one comment on this is that this is outlining the AR process from the standpoint of the merchant, but I think one thing that's also involved with this is the customer, right? There's
100%.
steps in here where the customer is going through this and receiving and paying it, and there's a cost for them and there's an experience for them where it can sometimes be not so positive, right? It's also going to be very manual and inefficient for them having to go a manual process like this. So
great point, Sam. It's a great point, Sam. And it leads to all of these other effects, right? So there's the problem and then there's the symptoms. And I think some of these become symptoms that we take for granted in the way that we do business today, right? There's the cost of money. How long, what are we paying to have that money outstanding versus, remember, one of those CFO priorities was the ability to get capital, get access to capital and financing through other sources of cash, right? Or are they doing that through credit cards? The cost of that money is really important. We want to get the cash in the door as quickly as possible, which leads to the next thing of delayed access to cash. We just looked at it, right? 28 to 45 days is the average when we could be getting access to that cash in just a few days. Days sales outstanding. How long between when we issue that invoice, kind of building on the same theme, right? Does it take for us to recover that? And everything that we're looking at here is, of course, affected by the time value of money, which we all know is only going to become more of a challenge the more distributed our organizations become. And so we want to be able to take advantage of automation. We want to be able to take advantage of digital types of payments. We want to be able to take advantage of credit card payments in our business. As business consumers, sometimes we think there's this world as a consumer, right? And then there's this world as a business, when in fact, those worlds are coming together more and more every day. As business buyers, 46% of B2B purchases are expected to be able to be made. They're not always able to, but they're expected to be able to be made the same way that we do as consumers. We want flexible options. We've gotten used to it as consumers. We expect it now in our business lives as well. So I think we need to be aware of that as businesses who are issuing invoices and accepting payments from our customers as well. Specifically within B2B AR, as we just kind of started to have this conversation, some additional data points to just consider. Again, you have your own sources of data, you know what your day-to-day life is like, but just some additional points to help bolster your business justification. If you're in the process of evaluating automation, what does that mean for our business? How does this compare? Where do we rank against others in our industry, specifically within business to business accounts receivable? Here are some of the challenges and how they have changed year over year just within the last year or so. So number one, here we have receiving payments within agreed upon payment terms. Now, I don't know about you, but when our accounting and finance team would see, hey, we can get a discount if we, 2% net 10, right? If we pay this invoice within the next 10 days, we can save 2%. Those things tend to add up. But what we see by and large is people extend that out longer and longer, right? So getting businesses, getting people to pay on time or upon agreed upon payment terms is really difficult. It's the number one challenge, as stated by 58% of those that responded to this, and that's up 7% year over year. So of course, people want to hold on to their money longer, but we also want to be able to make it easy for them to make those payments when they are ready. Next thing, matching payments within with appropriate invoices. I don't know about you, but reconciling statements and payments and line items can get pretty intense and very detailed. And whether it's a short statement or one that's 22 pages long, matching those payments to the invoices, especially when you've got a one-to-many situation, as is the case often in a B2B world, right? 36% say that's been a challenge for them. Now, good news, that's down 11% year over year, which indicates that there's some level of automation, some level of digital matching going on there. So kudos to those folks that are able to take advantage of that. Managing credit and collections. This one, I guess we can all relate to, right? It's the person on the other side of the phone that's, on the phone more than your sales team, right? When can I expect that payment? How long before you're going to be able to issue that? When are you going to be able to mail it out? Again, very reliant on those types of manual processes. 35% say that this has been a challenge for them specifically, and that's up 7%. Again, you don't want your accounts receivable collections person to be on the phone more than your salesperson, right? This should be the other way around. And then receiving usable remittance advice from partners. We all get data in lots of different formats. None of it is standardized. It's whatever they happen to issue, right? And with digital payments, you can count on the format, the data that's included, the level of detail that you're going to get. You have much more control because there's much more standard data. 33% say that this has been their challenge, and that's down 13%. Again, indicative of the fact that we're starting to make that shift more to digital types of payments.
So, Mary, I love kind of all these slides up to here because it really outlines a lot of the challenges that businesses face today. And they may not even know that they're facing these challenges because it's just kind of the status quo, right?
Mm-hmm.
We're accepting these invoices. We've had our process for the last 10 years, 20 years, right? This goes back to the 90s, it seems like, in some cases.
Right.
And it seems like the big obvious solution to this is digital payments, right? And what does that really mean? That means let's look at how we can leverage technology and look at different types of payments outside of your physical check, like ACH and like card, which can have a lot more flexibility to get paid faster and to be more efficient. I know one of the big things that we want to get into when we start talking about accepting card payments is, as a business, there are kind of some security requirements. So, Jeremy, I want to toss this over to you. If you could outline a little bit about kind of the security and compliance within accepting some of these forms of digital payments.
Yeah, absolutely. I'll start here covering the security side. Definitely going to move into a little bit more of the applicability of the stuff Mary's talking to too as we go through it. But I think security is a great place to start. Certainly one of those non-negotiables as we get into digital payments, and one of the boogeymen that people look at are scared about. And, it's one of those kind of black boxes as you're starting to get into accepting digital payments. So I'm going to start with sort of PCI compliance and what that looks like for the average merchant. So there are essentially 4 levels of PCI compliance. So there's levels 1 through 4, level 1 being the highest level. That's if you're accepting more than 6 million card transactions a year, essentially. So there are other ways to get put into bucket 1, but that's the kind of easiest way to look at it. So this is the very largest overall merchants, people accepting cards, a lot of retail, things like that in there that have a lot of low dollar amount, high volume of transactions. Level 2, is 1 to 6 million. Level 3, 20,000 to 1 million, and level 4 under 20,000. Level 1 is where you're in a full PCI audit. This is where you have to bring in a QSA, a company to come in and evaluate your entire organization, produce an entire, report on compliance. And it's a very intense process. A lot of our merchants, that's a little bigger than the average. So there are less people who are in that bucket. And then levels 2 through 4 are evaluated in pretty much the same way, which is your processor acquiring bank will require you to fill out a SAQ, so a self-assessment on compliance. So you have to go and fill out and detail all the different ways that your compliant in different things like, you're not storing cards. How do you do this or that different scenario? And that's where, the right partner, the right processor, will help you through that process to make sure that you know how to answer all those questions. And this is really one of those areas. It's kind of twofold. The hidden cost here is, you have to take this seriously because, if you do get into a breach, you have a lot of liability there, right? Whether that's from the card brands, other areas. So you want to make sure that you definitely take this seriously. On the other side, a lot of times if you don't fill this out, a lot of processors will assess you a fee for non-compliance. So if you're not paying attention, if you haven't gone through this, if you're out of date, you haven't done it, in the proper amount of time, you can start to see some fees add up here. Usually just a fixed fee, but can also be basis points as well. So definitely something that can sneak up on you, if you're not careful. SOC 1 and 2, I'll leave that one pretty open. This is really only for financial institutions. And so this is going to be a lot less applicable for most of our merchants, but definitely something to be aware of if you sit in that financial services realm of something that's, pretty intensive audits for SOC 1 and 2.
So Jeremy, Mary had mentioned earlier on this presentation the costs of accepting a physical invoice, right? And that number was over $23 per invoice, and that's regardless of the size of the invoice, right? And that includes time value and labor hours and actual processing hours and stamps and all that. When it comes to digital payments and specifically around card payments, what does that kind of cost structure look like?
Yeah, absolutely. I think that's a good thing to kind of go through here, because I think this is one of those areas, especially as we start talking about places that you can save. It's really important to kind of understand where the money actually goes and how it flows, and where you can save and where you can't. So I've put together a pretty simple diagram here that's just customer buying from a merchant, simple $100 for round numbers. And this is really the way that the fees or interchange rates, get added in here. So the first one here is the issuing bank. So the person who is producing the card that is going to be used to pay the bill, they're getting about $1.75. So you can see here, out of the total, the lion's share goes to the issuing bank, and that's really because they're absorbing a lot of the risk in the transaction. And when you think about all the different fees that are part of this value chain here in credit card processing, a lot of it is mitigating risk. And so when you look at the issuing bank is absorbing the lion's share, they're extending credit, they're on the hook for, the fraud tools, for the chargebacks, all those things, they're in the biggest scope for that. The next, you have the card networks. So for facilitating all of the things that make credit card processing work, they take a cut as well. At the end of it here, the processor or acquiring bank, you'll see those. It depends if those are separate or not, but they're taking about 30 cents off here. And so your relationship is typically with your processor or acquiring bank. And that's where, you have a lot more flexibility on overall sort of, what your costing looks like. But when you look at the card networks, the issuing banks, those are pretty well fixed on what their cost structures look like. The only difference there is that 175 from the issuing bank, that's where the interchange rate comes in. And this is where, depending on how you accept cards, the type of cards you accept, which we'll get into in a minute, that's where you have some flexibility in making that number go down as well. So you can see overall here, we're just around that $3 mark overall, 3%, a little less here in this case of the overall transaction. So if you were to look at, in Mary's example of paying an invoice with a rather fixed cost of $23 per invoice paid overall, that could be a lot more or a lot less than this, depending on the overall sizes of the invoices, because those are not scaling costs, right? Those are people, those are processes which don't change with dollars.
So for merchants that are currently accepting cards today, right, when they look at their merchant statement at the end of the month, whenever they receive that, typically the largest cost, as we can see on your example, Jeremy, is this issuing bank cost, which we know as interchange. Now, most financial folk know that interchange is going to be an expense in there, but kind of the misconception that a lot of people have is that this is a fixed amount, right? It's just the cost of doing business. Interchange is always going to be there, which is true. But one thing that you mentioned, which I thought was interesting, is that you can actually impact that number, that interchange amount. Can you based on this chart that I've got pulled up, what does that actually mean?
Yeah, absolutely. So, obviously credit cards, very well versed. Everybody uses them in their daily lives as a consumer in that sort of, I'll say, B2C world, right? In the B2B world, the card brands have certainly put a lot more tools in place over time to incentivize moving some of those dollars over into credit card processing. And so one of those ways, or some of those tools they put in place are a part of some of the levels of processing. So you'll hear people talk about, level 1, level 2, level 3 processing for credit cards. And so essentially, instead of, in that previous diagram, $1.75, whatever percent, that would work out to in the interchange, you have the ability to impact that number based on the data that you're sending with the transaction. So if your card is level 3 enabled, which a lot of the corporate cards, government cards, those sorts of things, fleet cards are enabled for level 3. Level 1, level 2, level 3 means different levels of data. So you look at level 1, it's pretty bare bones. You're sending the merchant, the billing zip, the transaction amount. You get into level 2, you're sending more data. And all this is really to offset the risk. The idea being the more data you can provide about the transaction, the more traceability, the less likely that it's potentially fraudulent. And so that's really the idea behind influencing those levels. So you get into level 2, you have things like taxes, PO numbers, tax IDs, a lot of other different data here. And you can all look this up online. So I won't go through, the exhaustive list of all of it. And then level 3 really gets down to, you think of it as line item level. So what items are you actually selling them for, how much, taxes, all that. So basically you're sending a lot of rich transaction data with the transaction that, on the one hand helps with lowering your rate. So if we hit level 3 here, you can see we can get down to, 1.9 versus almost 3% for a non-qualified, transaction. But it also gives you what's called kind of rich remittance data. So as Mary was saying, one of the tricky parts of a AR department's life is matching, right? So we got this dollar amount, we got this check, it doesn't say what order number. I've got to go in the system. I have to figure out where to match that to. Well, with the rich remittance data, we have exact information about exactly what invoice, what line items, everything like that, that's part of this transaction. And so if we're sending level 3 data, we're helping in all of those ways, right? So we're getting the lowest rates overall. And we have a lot more information about the transactions that's passing to our suppliers and depending which direction you're going, which gives more information as well. So we know exactly what is being paid and helping for the match. All right. So next, I want to talk. So we've talked a lot about some of these individual areas, whether it's day sales outstanding, cost to process. And when we talk about accepting cards, what I'd really encourage you to do is not look at the exact direct cost all the time of what the card is. That's just one part of the equation. We have to look at what is that cost to process the check. How does that impact our day sales outstanding? How does that impact, our bad debt ratios and bad debt expense? So I created, an ROI calculator that we use here that helps us kind of figure out what our entire picture looks like, so we can really make better decisions about things like, okay, what are our terms? Are we going to offer, as Mary mentioned, 210 net 30? Where we give a discount for paying early, or if we just provide cards, how is that going to impact our day sales outstanding? So to me, the important part about card acceptance is it's part of the equation of getting paid faster, and what does that overall dollar amount of accepting all payments cost to us, and what are all those individual areas. So in this sheet here, I have just some assumptions that we create. So I've built out basically a $20 million, and I've modeled it after a distributor here. So we've got how many credit card transactions we're doing a month, the level that we're getting to level 2 and level 3, how many credit cards versus cash and check. So if you look at that diagram back that we showed earlier, I've got a little bit of that modeled out here based on my experience. And then all of that is building out kind of a real world year-long cash flow diagram for an organization. So you can see what the outputs of this are. It's about a $20 million company with 130 employees. Average AR about 1.7 million. Total amount to process, we're processing about $5 million in credit cards, 4.6. And if we go down here, one element that I want to talk about is we talked about what that interchange looked like. There's also a lot of things you'll see out in the market are about flat rate. So I've kind of looked and seen, here's what our cost of processing would be on flat rate versus interchange. So I've laid out here the level 2, level 3. And so just by switching from a 3% flat rate to a graduated interchange here, these are all averages. So it'll totally depend on your organization for exactly what this would look like, but we can look at that. You can see overall what the cost of accepting here on cards. So I can I can save about 26,000 by switching to cost plus here for this size of an organization. But we can see we've got some other costs I have in here. So I've got bad debt expense. So I've got that down here at about 1.5%, which is on the bad side, we'll say, for an organization. But it depends exactly what industry you're in and what collections look like. You get into medical and some others, and that climbs up to 4 or 5, depending on the overall organization. And so you can see there's a lot of big dollars flying around here in the manual cost to process in some of these. So while the credit card processing here, whether it's 110 or 140, is really paling in comparison to some of our manual processing costs that can happen here. So we go in here, I've got days sales outstanding. So if I were to introduce cards, let's just say I want to increase my card percent, and let's just pretend I can drop my DSO by maybe 6 days here, go to 32. And that will then in turn statistically increase or decrease my bad debt expense. So take that down to like a 1%. So you can see quite a bit, we've improved here overall in the overall cash flow. My bad debt's gone down, over $50,000 just on that 0.5%. And so you can start to see where you start to play with these numbers and look at them and track them over time. You can really get a better picture of what your overall cost to process is. And it's not just on the credit card side, it's also on the checks and how much we're paying over here. It's on the bad debt that we're influencing as well. And so it really is should be looking at kind of a totality of the overall cost to accept and bringing down that number. So you can see here, I've gone down a significant amount in average AR, which means my cash flow here has lifted up a little bit, which makes all of my other decisions better as well. I've drawn less on the line, all those sorts of things. So really, when we look at that cost of acceptance, it is important to look at, okay, yes, we are getting the best deal possible on credit card, but there are some sneaky other numbers in here that we should be keeping track of, that credit card and digital payment in general, whether that's ACH as well, can really help lower those numbers, whether that's the manual processing or the bad debt.
Jeremy, it's almost like, people think about the costs of these different line items, right? And the only visible line item that people see is that, charge on a statement, so to speak, right? Everything you've illuminated here, though, is really about almost, you can't afford not to because of the savings when you factor all of those other variables into the equation.
Yeah, and that doesn't even, Sam pointed this out earlier, it doesn't even take into account the customer service aspect, right? Like, it is much better for offering to our customers the ability to pay, quickly. They would rather do that too than push all that same cost through their AP department to cut those checks out as well. So it really is, you look at the totality of supplier to buyer relationships, it can also help have a better relationship with your buyers as well.
So Jeremy, we looked at a slide previously about interchange optimization as a way to mitigate some of the costs that come with card acceptance. What other levers can we pull? I know that you have a couple pre-prepared up here.
Yeah, so just a couple other things to think about as you're going through and thinking about that cost of acceptance and trying to make that as small as you can. There are large purchase rate tables you can do as well. So Visa and MasterCard have the same, similar to that interchange table that we showed before for level 2 and level 3. If you're doing large purchases, say over $8,000 is usually where it starts, you can start to get some more aggressive rates. So, I think we saw the lowest kind of level 3 is usually 1.9 or so. The large rate tables can drive that down to about 1.4 overall. So depending on exactly what your transaction makeup looks like, if your average ticket is much higher, you can even drive that, potentially lower, depending on exactly where you fall and what, MCC, what SIC codes you fall in, depends as well. Another one, network tokens. So I think we've all heard of tokenization. It's been the kind of the rage the last, let's say 10 years or so. A lot of that before was done by the individual processors, networks, sometimes different pieces of software. Well, the networks themselves, Visa, MasterCard, have their own tokenization schemes now. A lot of that intended to, make it easier for customers to have those and own those. But you are able to get, up to 10 basis points as well if you're using network tokens. Again, just kind of de-risking the overall transactions. Another one here, surcharging. So this is one where I think everybody's familiar with this as well. They probably experienced it in their consumer lives, where you pass on essentially some costs of the overall transaction. So there are a lot of rules and regulations around what's allowed here. So definitely this is one to get with your processor to make sure, or get with your merchant provider on exactly what the rules and regulations are here. It matters. It's different state by state. It's different on exactly what the percentages are, but it is something to look at. If the cost of acceptance is really hard thing to sell in your organization, this can be something that makes it more palatable for the organization. So definitely something to look at. Another one here, if you're in the business of auth and capture, so if you're pre-authing before shipment, when an order comes in, and then capturing on shipment, there are things here to be aware of as well. If you let auths linger for too long, 24 to 48 hours, kind of depends on the organization and the situation, that can end up sticking you into some of those unqualified rate buckets. So while you might have a level 3 transaction, if you pre-auth it and capture it 7 days later, you might end up in the unqualified bucket, paying, a full percentage point or so more. And so those are just some operational things, for the organization to be aware of, that allow you to offset some more of that cost potentially, depending on how you operate.
Thank you, Jeremy. So with all this information that we've gathered so far on this call, right, Mary's talked about a lot of the challenges and how we can improve on that. Jeremy, you discussed a lot of the costs and the best practices involved for merchants to expedite their payments by leveraging some of these forms of credit card payment methods. I think now's a good time to bring in, well, how does PayTrace affect all this, right? Where does PayTrace come into the equation? What I'd like to show you is actually a quick demo into our system. And I do want to highlight one of these topics over interchange optimization. And I'm wondering if anybody in the audience's ears were ringing when kind of the dichotomy of Mary talked about process improvement, but then Jeremy talks about adding a lot more data into a transaction, right? It seems contradictory. Well, that's where PayTrace comes in, is that we are able to automate all of these processes, especially all of these data entry processes, to make those cost savings, those expense reductions, more accessible to our merchants and to our clients. So I'm going to go ahead and actually hop over into my browser here, and we're going to go to PayTrace, and we're going to take a look at what our solutions look like. I'm going to log in as if I am a merchant, right? So username, password, and there's a lot of different payment tools that we have. This is just going to be our own standalone kind of gateway and virtual terminal solution that I'm going to highlight really quick. But let's just pretend that we need to take a credit card payment. I'm going to log into my account, and I'm going to go in and I'm going to enter this in. Let's just say somebody's giving me a payment over the phone. Hopefully, everybody in the audience has made some form of online payment before, so none of these fields should be out of left field for you. So I'm going to go ahead and just grab one of my tokenized cards on file let's do Patrick Reed. I'm going to fill in all of his payment information. And we're just going to run a very quick, simple transaction. Now, I happen to know that Patrick, he is a business client of mine. And what I'll notice here is that when I process this transaction and I get that approval, I get that authorization, this blue field is going to pop up, right? And what this is telling me is that PayTrace is recognizing that this is one of those business-to-business commercial credit cards, right? One of those that Jeremy talked about earlier on that chart. This is a purchasing card, which happens to be eligible for level 3 processing. So what's really great about this technology, about PayTrace, is that anytime one of these eligible credit cards is being processed, we are always going to identify that this is a level 2 or this is a level 3 eligible credit card, right? That's not something that we need to guess on. Now there's this button that says add level 3 data. And what Jeremy didn't mention is that when we talk about getting all this, rich data added to the transaction, there's quite a bit that needs to go into it. For level 3 qualification, to get that lowest rate, merchants typically will need to enter in about 20 to 25 extra fields of information, right? Which we talk about manual data entry processes that could take, 5+ minutes per transaction. Now, what PayTrace does is rather than making the business manually enter that information, we're going to automate that process, right? You'll notice when I get to this page, it's actually showing me all of the required fields, but notice that they're already pre-filled in. And this is what's very unique about PayTrace's technology, because you'll find a lot of payment solutions out there that say, we support level 2 and level 3 data entry. But the big thing is, right, how are they actually doing this? It's not very common that solutions are going to be able to automate all of this information, right? So what's great about this interchange optimization with PayTrace is that not only are we going to be able to drive down some of those fixed costs, but we're going to be doing that automatically, saving time, which, as Mary mentioned before, right, that equates to saving money as well. So what's great about this is that, I'm just showing you one method of a transaction, a very basic one, which is just typing in something on our online portal. What's great about PayTrace is that regardless of how we are accepting this transaction, whether we are sending out a digital invoice or we are doing something integrated through an ERP system or an accounting software, right? Every single time one of these types of credit cards hits our system, we will always automate that data to make sure that our customers are paying the least amount of money possible. So, brief demo. So let's get into a little bit more about, AR automation. We talked about the challenges. What are some of the benefits to automating our accounts receivables?
Yeah, Sam, it's interesting when you look at the data elements of that. It's that manual keying of data is a very time-consuming part of the process. In fact, even and whether you're on the AP or the AR side, most finance teams have those sort of roles divided, right? But that data entry can be a significant part, 30 to 40% of people's day in many cases. So not only are they being inefficient, they're not getting to other things like their core business. So some of the benefits here, when you start to automate even the data entry piece, you can be more efficient and focus on your core business, not your chore business, so to speak. And of course, it also gives you faster access to cash. And I saved that the one on the right till the end, even though I went a little bit backwards on some of these other boxes, because that efficiency element is just so important. But customer retention and loyalty, we're seeing in the industry, we're hearing from our customers. You can read about it in your favorite, B2B payment source if you like. Customer retention and loyalty, because we're merging our worlds of being a consumer and being a business buyer, right? Those things are becoming more and more of an expectation. There's data out there that suggests more than 50% of B2B buyers will continue to buy from you if you make it easy for them to pay, right? You're increasing your customer loyalty based on your business decision of how to accept payments. Regardless of how great your service and your products are, making it easy to do business is just such a valuable, important part of that customer relationship, right? So all of these benefits come to life when you're not only accepting digital payments, but when you really start to automate that 10-step process that takes 28 to 45 days, right? So I think next, Sam, you're going to show us what that could look like if we begin to automate that AR process as well.
Absolutely. So when we talk about some of the tools that PayTrace has to offer, we actually just brought to market this really great new tool that we call Trace AR. You can see its awesome little logo here on our screen. And what Trace AR's goal is really to address some of these challenges that Mary's outlined, and how can we get quicker access to cash? How can we make that customer experience better? And how can we free up and shore up time for our team so that they can focus on really what's important to them, which hopefully isn't collections. So you can see I've pulled up a demo account of Trace AR. This is a standalone accounts receivable program. So if you're not needing an integration to anything else, you can use this as kind of its own tool. But what I'll do is I'll show you just a very quick example of an invoice that we can send out to one of our clients. So what I'm going to go ahead and do is I'm just going to create a new invoice from scratch. I'm going to pull up one of my stored customers, and I'm going to use myself as an example. So I owe myself money. I'm going to give them an invoice number. I'm going to use today as the date, but if I wanted to kind of store this for a future date, I can. And then I'm going to add some terms. Kind of a default term is net 30, but you know, some people, if we do want to accelerate that cash, I'm just going to say due upon receipt. Now on this, on the right side, as I'm going in and filling out this invoice, you're going to see what that invoice will look like in the form of a preview. So if I have some itemization that I want to add to this, if you've been on some of my trainings before, you know I'm a bit of a golf nut. So I'm going to add a few golf products on here. Sam is going to purchase a driver, and he needs a new lob wedge because obviously that's going to help my game quite a bit. So you can see as I'm putting this in, it's automatically adjusting that invoice on the right-hand side to itemize out everything that happens. So it's very crystal clear exactly what this invoice is for. I can add some custom messaging on here, right? Maybe be a little bit more tactful than me, but that'll appear on the bottom. And then what a lot of businesses like to do is they like to add an attachment, whether that's more of a descript PDF that they've created internally, or a lot of the times if we're doing jobs or work of something physical and we actually have like a before and after photo, who knows what that could be. I'll go ahead and just grab some random photo in here. You know what? I had a good one earlier of our studios, but I don't know where that went. So I'm going to put my fantasy football standings in here. And when I do that, it's going to attach that photo, and then I can send this off. Now, what's really great about this team is that when we talk about more of the physical process, right, once we put that invoice in the mail, it's out of our hands. We have no visibility into anything unless we actually pick up the phone and we call our customers and harass them and say, where's our money? We're not going to know what's going to happen if we're going to get that tomorrow, if we're going to get that on day 30, day 60, or if that's just bad debt. What's great about Trace AR is that we have tracking built into this. So if I go into that invoice that's currently outstanding that I just sent, it's going to give us information exactly where that invoice stands today. So I can see that it's sent out via email to sjohnson@paytrace a few seconds ago. And that's pretty much it. A text was also sent. What I like about this, and Mary said this earlier, is that as consumers, we want to be able to pay as businesses the way that we do as consumers. And a lot of that is going to be more mobile applications, right? So this also has the ability to send this invoice via SMS. Now, if I was to go into my email, which let's see if I have access to that really quick, and pull up that invoice, you can see here that this is what I just received as the customer, right? Very simple invoice, demo company, Sam Johnson, and then I can review and pay that, and that's going to open up our secure payment page here. Now, this is exactly what we saw in the preview, right? I've got the total amount, $650. I can see exactly what this invoice is for. That photo of my fantasy football standings carries over, and then I can just go ahead and pay this as is right on my computer. So when we talk about reducing day sales outstanding, you can see I fired this invoice off, and then my customer can pay literally within minutes, right? So when we talk about access to cash and accelerating that cash flow, using digital tools is going to make that so much quicker and so much easier, not only for you as the business, but for your clients. All right. So that's just a quick sneak peek into this. At the end of this, if you do want to get into some more, we're going to give you some contact information on how to get in touch with us so you can see more of our solutions. But to kind of put a bow on things, we did want to provide some real life examples that Mary had put together of some of our customers and how they're utilizing PayTrace today.
Yeah, thanks for that demo, Sam. I have to tell you, I smile from ear to ear when I see that, just because of how fast it is and how user friendly it is. And one of the things that we hear from our customers is that that whole experience just has to be seamless and easy. And the fact that you can email and text things, just, that's living our world, right? We're all kind of in that real time, instant gratification, instant access to data and cash in this case. That we just expected. And it's the same for our customers. I'll share a couple examples with you guys here today. The first of which is ToughShed. And they were in a situation where they had outdated credit card terminals. They were not using the latest in technology or compliance, as Jeremy described earlier. That can be very expensive if you're not up to speed on PCI and other security standards, where you can start incurring fines, in addition to the fact that it can affect your ability to process. So they couldn't also integrate into their CRM, which, again, that whole customer experience, think about the times that you've called someplace that you frequently do business with, and they go, wait, what's your customer number? Who are you again? And you're like, I buy from you every week, shouldn't you know me? And as a business relationship, that becomes even more important. So they weren't integrating this payment data into their CRM. Everything was entered manually, which, as we've talked about, the time and the cost and the delay and the inefficiency just made for a very frustrating customer payment experience, and a frustrating experience for the finance team at this organization. So once they integrated PayTrace, everything you saw Sam do within the PayTrace interface and all of the credit card data and L2, L3, everything is now part of that transaction. And they used our API to feed that into their CRM system. All of their payments are now processed digitally. They settled over $422 million over the last 3 years using our services, using our gateway, using that L2, L3 data entry process automated for them. It significantly reduced their data entry time, 15%. They were able to measure it and capture that. Some people actually are able to capture that, others aren't. You just know that you're being more efficient because you're able to get to things like financial analysis and reporting and being more proactive with your decisions, because your money's coming in and how it's being managed. So overall, they experienced those benefits as well as those significant savings from the interchange optimization. And so they really appreciated the savings, the compliance assistance, but really just that reliability, knowing that they're using cutting edge technology, along with their white glove support that they receive from the PayTrace team, which we'll talk a little bit more with the next example. Thanks, Sam. So the next example is our laboratories. And similarly, they had manual, outdated processes, but they were using very much manual processes, and they had really high processing costs. And they really found that element of support difficult with the organization that they were working with previously. It was tough to get a hold of somebody. It was tough to get help when they needed. There were significant delays between putting in a request and getting a response. I mean, when you're dealing with payments, this is critical information, right? It's literally the foundation of what you're doing to run your business. And so they really needed to have a better, more integrated, more sophisticated payment process. And so when they started using PayTrace, they really experienced the professionalism. You saw it and Sam pulled it up. It's very simple. It's very easy to use. It's one of the things people love about working with PayTrace. They were able to easily send payment details through payment link, which is one of the ways that Sam talked about, being able to send invoices out and get that quick response, quick payment access. They had the security built in, so they didn't need to worry about those security controls because we were handling all of that for them. They also use our hosted service for PayTrace Protect. You can learn more about all of these examples by visiting our website or reaching out. As Sam mentioned, we're going to share in just a minute ways that you can get in touch with us. But they also experienced a significant savings with their L3 transactions, and they've settled more than $1.3 billion with us over the last 5 years. And so while they really love the secure, seamless, cutting edge technology that they received, what was most important to them was their ability to get 5-star support. When they had a question, when they needed help, they got it right away. And then they added to that by saying, hey, we're so committed to this relationship. We want to be able to share input and influence the product roadmap and share features and enhancement suggestions, which of course we love to hear from our customers and partners as well. So it really rounded out the experience for them to not only get a great solution, but also to be part of that solution going forward based on their relationship with PayTrace.
What I like about these two examples that you brought up, Mary, is that these are very different, not only types of businesses, but how they're accepting payments today, right? This one that we have pulled up on the screen is using all of PayTrace's internal products, right? Products that we've developed. The previous one is primarily embedding payments with the PayTrace API into their existing platforms, right? So in that case, they were using a CRM. In many cases that we see, it might be an integration into QuickBooks or Microsoft Dynamics or NetSuite or whatever ERP or platform that you're using today. What I think the great thing about PayTrace is that we've got flexible business solutions geared towards any of the different ways that a business might want to accept a payment and optimize for their business. So with that said, on that note, I notice that we're coming up on time. I'm going to open this up for questions and discussion. I don't think we really had anything coming through on the live channel, but if you are watching the recorded version of this, please reach out to us or comment on the platform that you're viewing this on. If you do have any questions, feedback, thoughts, we want to hear that. We want to hear your feedback so that we can better understand your needs and how we can meet those.
Sam, this might not be in the chat Q&A here in the system, but one of the things that I think we hear all the time that maybe you can address is, what does the timeline look like, right? How quickly, if somebody says, yes, these things look great, how long does it take before I can start using PayTrace? It's a common question. Maybe you could share some insights on.
Yeah, that's an awesome question, Mary. I will say, it does vary depending on the type of business and what you're looking to do, but typically, right, we're going to make this as smooth and seamless as possible. A lot of you might be using some other sort of process today. What I think Mary called out earlier is that we've got a really responsive and reliable team that's going to take care of really all of the setup, the training needs that you might have, and making sure that we can put together a solution that's going to meet your business needs. So if you're looking at timeline, depending on your business and your rollout, it could take a few days, it could take a few weeks. But we'd love to chat with you a little bit more about kind of what you're looking to accomplish within payments and see how we can assist you with that. All right, great question. With that, we do have a lot of resources. We are constantly putting out information, educational purposes, as well as new product information and some best practices that you can consume, right? So we have a blog. We also have a YouTube channel. This recording will live up on our YouTube channel along with a lot of previous webinars that we've done. So if you are interested in learning a little bit more about us and you have some free time, I definitely strongly encourage you to check out that YouTube channel. And we also have some B2B payments resources through payments.com that we've referenced a lot of information from there. So definitely encourage you to check out some of these resources. Lastly, if you want to get in front of our team, we'd love to have that conversation. We showed you some very brief glimpses on what PayTrace can do on this call. Would love to get you more of a larger demo if that's something that you'd like to see. You can go to our website at paytrace.net/get-started. We'll also have the link below in the description so you can access that and get in touch with somebody on our team. Or if you want to just email us directly, please shoot us over an email at sales@paytrace.com, and we'd love to have that conversation. And with that said, I think we are at time. I want to especially thank everybody that was here today on this live recording. Mary, Jeremy, thank you so much for sharing your insights. This was extremely valuable. I appreciate you taking the time out of your day.
Thanks, Sam.
Thanks.
Everyone.
Thank you, everybody. Take care.